Hi, I'm Daniel, an 8-year veteran prop trader helping beginners learn to trade. I run an FX Trading Lab community for all traders. For more details, check the description box below this video. Today, I'll cover gold technical analysis from our trading lab. I'll be sharing some of that analysis as we go through today's review. Currently showing a temporary shift, here's my short-term view. For today's outlook, I'm leaning bearish overall. Exactly as I shared with Trading Lab members in yesterday's analysis, this sideways range broke down followed by a clean pullback move, and price has since returned to a downtrend from there. The most recent high has not yet been broken to the upside, so the bearish downtrend view remains in place for now. Let's briefly cover the short-term directional outlook for gold. As always, let's dive into the Tokyo session analysis in detail. I also want to cover gold and the previous day's cooling off. This was confirmed by that bearish candle. The original night scenario, what I had anticipated was the previous candle and that day's cooling momentum. Yes, that cooling closed with a long upper wick, showing relatively strong momentum. Using these two candles as the reference base for a horizontal range, I had outlined a scenario where a double range formation could develop. But looking closely at yesterday's bearish candle, the real body is very large. The prior candle closed as a complete outside bar, cooling the momentum on the close. The underlying momentum here is turning out stronger than initially expected. This makes a further upside follow through quite likely now. Right now, we actually have a fairly large bearish candle body forming, so it's trying to form a cooling pattern without retesting the level, showing strong momentum that confirms very strong bullish momentum in gold. Right now, the nearest bearish candle low below is the key level to watch. So the question is how far down the price could actually fall. We use prior price action to find the measured move. So we need to use that to plan our trades with such strong bullish momentum in play. With such strong momentum, a weak reversal candle won't flip the trend. So we should factor that momentum into our read of the market. The reversal candle at that level also failed, so watch what comes next closely. A gradual shift into an uptrend after confirmation is what we're watching for. So we need to carefully watch and assess how this situation develops from here. So let's keep a close eye on this as a key time-sensitive factor. I'll be covering this in detail for our Trading Lab members shortly. The details are exclusive to Trading Lab members, so here are 4 quick points. Please keep that in mind as we now move into yesterday's analysis. In our Trading Lab community broadcast, we marked this red line level first. We use these two candles as our key reference candles for this analysis. We are currently sitting inside a horizontal range using these two candles as our base, with resistance above and support below boxing us in. We are caught between these two key levels in a sideways range. At that point, Daniel had discussed what the daily candle was showing us on the chart, which acted as the opposing candle favoring an upside breakout, and we discussed how a breakout was looking increasingly likely. From there, we were clearly in a sideways ranging market environment favoring a breakout. Wait for a full pullback before entering and then commit to a direction. I explained that was not a situation to cut the trade and highlighted one key candle. Let me show you exactly which candle I was watching closely. This is a small doji candle. The full reasoning behind this candle is in the video. I can't fully address that here, but strong bull positioning was likely at play. That was the key point where heavy long positions were likely set. When price breaks out above this level, stop loss orders will naturally get triggered. So it tends to sweep a lot of sell orders and drive price strongly higher. That's why price tends to follow through strongly to the upside. So if price breaks out clearly above this key level, I had mentioned we should switch our bias to bearish on that level. And then let's review what happened in yesterday's market and the key levels we were watching. A double bottom variation forming, then a reversal into a sideways range, focusing on this pattern formation and tracking the price action from the previous day. So let's now review how yesterday's market actually played out. This candle has become a complete sell setup signal. And if price breaks out above this sideways range to the upside, we could see strong bullish follow through continued on that key level. The candle that broke below this low was yesterday's. This is the largest bearish candle, confirming key resistance. After that, the bullish momentum remained quite strong and sustained. After 3 straight hours of upside follow-through, price pulled back. It set up another sell and carved out a clean downtrend structure. This pullback level was also marked as a key resistance zone right at that point, the shallowest pullback within the range, so downward momentum is likely to stay strong going forward. The downtrend is continuing cleanly and remains intact right now. As for the price range on this setup, let me mention what we are currently looking at here. From the recent high down to yesterday's Tokyo session low, the drop measures roughly $101. That's a decline of roughly 10 pips in total from the recent swing high. However, on the chart, this sideways range looks more likely to break to the upside, so that's the more likely outcome at this point. So I'll hold off on calling it a perfect scenario call, even though it played out well. And today's Trading Lab stream covered the cooling setup I mentioned. This market phase makes shifting your directional bias particularly difficult. A half-formed reversal candle cannot confirm a trend change, so what specific price levels should we watch for that? When we should shift our market bias going forward? I'll cover this in detail for our Trading Lab members. The basic trend remains intact and is still continuing, so we're still bearish. That's all for today's gold update.